Hello everyone. So today we're going to focus in on yesterday's US ISM manufacturing data. So it came in a little bit lower than expectations and some nervousness around US growth from some investors. So good morning everybody and welcome to Morning Markets. So firstly, ISM, the manufacturing data, probably let's define that. So ISM stands for the Institute of Supply Management. So it's a survey that goes out to different managers of companies in the US, and it's in the manufacturing sector. So what happens is they bring all of that survey together. A reading of over 50 is positive and it's expansionary. A reading of less than 50 is contractionary and can be seen as negative. So let's just dig into those numbers. So yesterday's numbers came in at 47.2 for the month. So that was actually up 0.4 from the July reading, but it was actually below the expectations of 47.9 overall. So what we saw there is that overall manufacturing companies are reporting some contraction. This fits in with actually what Matt was talking about in yesterday's Morning Markets, where he talked a little bit about European manufacturing struggling, but pleasingly actually UK manufacturing was showing expansion overall. But let's just dig into the kind of narrative. So the chairman of the ISM survey, a gentleman called Tim Fiore, he says demand remains subdued as companies show an unwillingness to invest in capital and inventory due to high interest rates and election uncertainty. If we look elsewhere in the survey, the employment index moved up slightly, but it was still in pullback territory at around about 46%. But I guess the key point of these videos and what we're trying to do is really what's our take on this overall. So yesterday's US manufacturing data could be construed as weak. And actually what we've seen is that there's been 5 months of contractionary figures from that ISM survey. But one positive is with the prospect of lower interest rates coming through in the US and actually the developed markets overall, that's expected to lift up manufacturing after its recent slump overall. There may be a little bit of uncertainty with the elections coming up, with companies trying to gauge their future spending, so their future capex under different presidential regimes. But we believe that interest rates becoming lower will actually help manufacturing companies as we move through into next year. So what happened on asset markets yesterday? A bit of a tough day in asset markets overall. So we saw the US market down around about 2%. And we saw the UK market down around about 0.8%. So the chip makers, the microchip makers, did particularly poorly, led by Nvidia, which was down around about 5% in early trading. But remember, we're not just investing in equities, we're invested in other assets. And it was actually a very strong day for bonds. So both UK and US sovereign bonds prices rallied over yesterday overall. Finally, from me, a bit of a shameless plug here, which is for the podcast. Please do tune in. It's going to be hosted by our CEO, Dan Harrison, and you're also going to get myself starring along there. So please do listen out. Do subscribe to our YouTube channel. Thank you very much. Speak to you soon.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.